Good afternoon, everyone. Welcome to our webinar today to discuss a very interesting topic on evolving landscape of domestic PV manufacturing in India. The event is organized by JMK Research, a market research and consulting firm focusing on renewable and e-mobility segments, and Institute of Energy Economics and Financial Analysis, that is IEEFA, which is a leading think tank that analyzes issues related to energy markets, trends, and policies. Quickly on the format of the webinar will consist of interactive discussion with our eminent speakers, followed by question and answer session. At the end, we will have 15 minutes for Q&A session. Participants are welcome to submit their questions in the Q&A box at the bottom of the webinar window. Some of the key discussion points for today's session will be, we'll want to understand the implication of PLI scheme on domestic manufacturing market, impact of ALMM on developers, manufacturers' perspective on new technology trends, PV technology adoption outlook, ancillary market development because of increasing scale of module manufacturing, key challenges, risks, and opportunities. And now to take on the discussion today, we have a very diverse mix of industry experts with us. A quick intro for experts here today. We have Mr. Vivek Srivastava, CEO of Waaree Energies, Mr. Amresh Mahajan, VP O2 Power, Mr. Gautam Samantha, Head PV Technology from Juniper Green. We have Mr. C. Chaudhary, CEO from Energy. And we have Kashish Shah, Energy Analyst from IEEFA. Thank you to all the panelists here to be part of this discussion today. We have also released quite a detailed report on this topic today. Link for the same can be found in the chat box window, which I will be just adding. And now to take on the discussions and to summarize the highlights of the report that we have released, may I ask my co-presenter Kashish Shah from IEEFA to present some of the highlights. Over to you, Kashish.
Thanks, Jyoti. Hello, everyone. Good afternoon. Thanks for tuning in. Just like to share my presentation. Jyoti, just want to confirm if the presentation is visible on this screen.
Yes, Kashish.
Yes. So I'm just going to quickly summarize some of the key findings of the report to set the context here. My colleague Vibhuti Garg, she's actually co-authored the report, but unfortunately she's presenting. Unfortunately, she couldn't make it on time for this one, so I'm presenting this on her behalf, but she'll be joining us shortly. So let's just get into it. So I'll begin with a snapshot that gives an overview of the current module manufacturing capacity globally. As you can see in the pie chart, China dominates the operational manufacturing module capacity globally with more than 60% of the capacity in China. In stark contrast to our neighbor, India only contributes 5% of the total global manufacturing capacity, but this is gradually changing. There has been a steady growth over the last 5 years in the module manufacturing capacity in India. The capacity has grown more than 200% in between 2016 and 2021. At the end of 2021, the total module manufacturing capacity was about 18 gigawatt. However, please note that this 18 gigawatt is the nameplate capacity. The operational capacity is estimated to be roughly 10 gigawatt. This is an overview of the Indian module manufacturing sector. So in the blue bars, we have the operational capacity and the owners of these capacity. And in the yellow, we have new proponents who have new and existing proponents who have planned for new capacity. So the majority of existing operational capacity is largely owned by three players, Vikram Solar, Waaree, and Adani. However, the capacity is set to ramp up and increase by multifold in the next few years with the emergence of new players. It's worth noting some of the new pure play renewable energy players such as Avada and Renew Power. They have planned for 5,000 gigawatt and 2,000 gigawatt of module manufacturing capacity respectively. And another interesting addition to this list is Coal India. So Coal India has plans to add 4,000 gigawatt of module manufacturing capacity It is reflective of the transition aligned with the objectives of Indian government to decarbonize India's economy powered through solar. So looking at the targets, the renewable energy targets by the end of this decade, we need about 30 gigawatts of annual solar capacity additions to reach the solar capacity targets. In this graph, you can see by the end of 2025, given the planned capacity, the cell manufacturing capacity in India could exceed more than 30 gigawatt, which would relieve us from a lot of import dependence that currently the sector faces. Also, the module manufacturing capacity by the end of 2025 could be more than 50 gigawatts, which would allow for some export capabilities as well. The growth has been driven by some of the favorable policies that have come out in the last 2 to 3 years. Number one being production link incentive scheme. So the government of India identifies solar module manufacturing as one of the key sectors to focus on. The initial outlay on the scheme was of rupees 4,500 crore, but now it's been quadrupled to rupees 19,500 crore, which will boost India's solar module manufacturing. The first tender of this scheme came out a few months ago and it received tremendous response. I will talk about this further in the coming slide. Basic custom duty. This is aimed at protecting the domestic manufacturers who have costs slightly higher than the foreign counterparts. Approved list of models and manufacturer. So there is a list that has been created to maintain quality standards in the sector. Also, there have been a couple other policies or deployment schemes that have been deployed by government in order to provide offtake security for the module manufacturers. So some of the centrally owned public sector undertakings having their own solar tenders, which are then supported by domestic content requirement. Also, the agricultural solar pump scheme, PM Kusum scheme, and also grid connected rooftop solar program requires domestically produced modules to be used. Also, a couple of years back, the government of India came out first of its kind of tender, which gave the developers an option to not only install a solar plant, but also to manufacture solar capacity. This is a snapshot of the first round of the tender of the PLI scheme. The scheme allowed various levels of integration for the capacity that the developers want to install. So for example, Reliance and Adani opted for a fully integrated module manufacturing capacity. So from polysilicon to wafers to cell to module, an integrated facility will be created by the likes of Reliance, Adani, First Solar. So there are certain challenges despite some of the policy developments and policy favors from the government. Number one is the inconsistent supply of input materials for solar. To name a couple, solar, glass, and polysilicon. Also, in terms of the technology adoption, India is lagging behind its foreign counterparts, especially China. 60 to 70% of module manufactured in India still belongs to multi-crystalline technology, whereas almost 100% of China's manufactured modules are from a monocrystalline technology. Also, there is dearth of R&D investment for the domestic companies, module manufacturing companies in India. Just to give you a flavor of where China is at in terms of R&D investment. Longai, which is China's globally one of the top solar module manufacturers, they invested about $70 million in R&D in year 2020. Also, one of the key challenges has been policy uncertainty in terms of providing support and clarity related to taxation, related to custom duties for the module manufacturers as well as the developers. Other challenges are the fact that the module manufacturing industry is very capital intensive. And because of that, there is also lack of production scale. However, with the PLI scheme and a bit of handholding from the government, this is likely to change in the near to midterm. The lack of module manufacturing capacity has also constrained our export capabilities. And at the same time, one of the key challenges has been development of skilled manpower. So during COVID, due to lack of skilled manpower, the manufacturing developers, manufacturing companies, they were constrained on expanding their cell manufacturing capacities. So these are, this is just to encapsulate and wrap up my short presentation. These are some of the expectations from the stakeholders. They suggest that there needs to be clear and consistent policy for at least a period of 5 years, and there should be uniformity both from center and uniformity on policies from center and states. Schemes like PLI, ALMM, BCD, which I talked about earlier, they all should be implemented appropriately as well as timely. Expectations of initial handholding by the government, especially in the upstream raw materials, especially to create ancillary markets for the solar industry, is very important. The Indian manufacturers are trying to catch up with the global counterparts who've already taken a leap in terms of advancing the module manufacturing technology. So there needs to be support and investment into R&D, and this could be done by strategic and collaborative partnerships from manufacturers, leading technology consultants, and academia. So I will pause here. Thanks a lot for patiently listening to me. Over to you, Jyoti.
Thank you, Kashish, for setting the context for our discussion today. Let's delve deeper into some of the points that are highlighted here. And to take on the discussion now, I want to know the views from a leading module manufacturer, which is Waaree, Mr. Srivastava. What is the impact of PLI scheme overall on the domestic sector? And what are Waaree plans for this year and beyond? Over to you, Mr. Srivastava.
Thank you. Thank you, Jyoti, and the audience. Thank you for taking your time, and good afternoon. I can talk about Waaree's plan as far as the PLI is concerned. As they say, don't count the chicken unless the eggs are hatched. So I will talk about it later on. But about Waaree's plan, we are on course to complete our journey from 2 gigawatt to 5 gigawatt. The graph shown here just needs a slight correction. We are already at 3 gigawatt commercial production, which means that 2 plus 1 is already done. Another 2 gigawatt is coming on stream in the next 45 days. So we would be 5 gigawatt by the end of this fiscal. That's where we are in terms of module manufacturing capacity. Majority of this, as you mentioned, the what is globally prevalent now, the high-end M10, M12, large size modules, high efficiency modules, mono-PERC. We have much before even this expansion scaled down already the poly manufacturing, knowing very well that the Indian market would also transcend to there. And majority of the lines out of the 3 plants that were producing 2 gigawatt have been translated to mono-PERC because India still has a huge demand of 445 to essentially 445. That's the expansion plan. The in terms of cell, the work on that's linked to PLI, while the PLI decision is still in the ether. We have already completed the land acquisition, land development, construction, foundation. Other than short of ordering the equipment and starting work, everything has been done for the gigawatts of cell lines in 2 phases. 2 gigawatt that has to be commissioned, planned to be commissioned by September. Another 2 gigawatt at the beginning of next year. Besides that, a lot of other activities around the large manufacturing complex, 100-acre plus that's come up near Surat, about 50 kilometers from Surat to Mumbai. And that's the expansion plan. And besides that, in terms of manufacturing, huge inquiries from export markets, already tied up more than 1 gigawatt with export markets, continuing to get even more demand and inquiries from there. And also, on the other hand, putting up lots of ancillary industries around the supply chain, Class B materials around the plant. On the second part, what you inquired about the PLI, as I said, we are hopeful that in spite of whatever media reports are being received, which can be misleading, the government, when it came out with this wonderful PLI scheme, had a clear methodology of evaluating and then awarding the PLI letters, which was essentially around the bucket list or the waiting list phenomena, even for which the criteria was laid out. So we have today 12 players who are waiting with clearly ranked. And now that the budget has been augmented from 4,500 to 24,000 crore with addition of 19,500 crore, and the total outflow of all the players is 22,600. We are hoping that it's a straightforward case and the PLI is given, because frankly enough, we have invested in everything that was to be done under the PLI to ensure not only do we beat the 18-month timeline, but we actually do it in advance and ride the demand curve that's there in the country and globally. Thank you.
Thank you, Mr. Srivastava, for highlighting the plans for Waaree. But there is a follow-up question again from you. Especially after the BCD implementation and the ALMM issue that is going on, what has been your take? Do you think domestic manufacturers will be able to fulfill the demand needs of the country for next year, for this year basically?
It's a simple curve. Today we have what is the deployment in the country and what is the capacity. Clearly, even today, the capacity is much more than the deployment. And if I look at today, the applications that are pending for ALMM with MNRE, we are today MNRE approved, ALMM approved 11.2, another 5 pending. That itself takes today what is there in terms of capacity by March to 16, out of which Waaree itself is 5. And my guess is that looking at the equipment that are ordered, 20 would definitely happen this fiscal. That's not what is the rate of deployment in the country. And then from next fiscal, the capacities that are coming up are going to be humongous. So actually the relevant question is, how much of the installed capacity in India will the domestic manufacturers have to eke out for exports? That's the real question. Because even today, domestic manufacturers, I can talk about Waaree, we are running at 50% or less of certified capacity for reasons we know better. And that's why we are having to look up to export markets to ensure the order book is full. The denominator cost of running factories in terms of scale, operation efficiency, etc., works out. So I don't see any way a situation in the coming years where the demand will outstrip production in India. In fact, it would be the other way around, trailing continuously. That's been our focus. And I think one of the things we have to look at, and this is a slightly deviation from the question that was put to me, is we are where China was there exactly 12 years back. Okay, what changed China versus what we may have to look at it is, China just did not look the simple arithmetic of how much is to be deployed this year and how much do we need to produce. Manufacturing is a different game. My belief is, and that's what various experts have pointed out, India is a natural sink for about 80 gigabytes of manufacturing, 35 for deployment, which we are looking out. And if we add up the green hydrogen, electrification of mobility and all that, another 10 to 15. Plus, out of the international demand of around 180, which is going up to 300, for reasons we know, geopolitical reasons, and today is a good day to talk about it. Whatever is happening in terms of a need for insulation of supply chain, etc., very clearly 30 to 35 more. So India should actually be looking not just at 35, 40, but essentially minimum of 80 gigawatts of manufacturing capacity for it to have a say in the world market. And as I said, China, for any manufacturing operations, Rome was never built in a day. China took a lot of time, did incentivize domestic production. We know today, even today, modules in India are cheaper than what you get in China. The incentivization, be it labor, electricity, aggregation, everything included. So we are at the cusp of that point where I think we can decide, or we have the opportunity to decide, whether the Swawalamban or the energy efficiency comes through Atmanirbharta or through imports or continues that way. Thank you.
Thank you, Mr. Srivastava. It's heartening to know the kind of scale that domestic players are planning, and it will be self-sufficient for the India market. But let's hear it from other developers on the panel now. Next, I want to take views of Mr. Amresh Mahajan, VP O2 Power. Mr. Mahajan, as a developer, what has been your take on what do you think how the market is going to affect because of these recent, BCD implementation will be there because of this ALMM related issues? Do you think what challenges developers are going to face because of this? Over to you, Mr. Mahajan.
Thanks, Jyoti. So first of all, I think any development which happens in India in terms of manufacturing, so whether it is manufacturers, whether it is developers, anyone, they'll always welcome it. So there's no way we can say it will not welcome, manufacturing happening in India. But simultaneously, we have to look at certain facts. For example, unless it is a pass-through change of law applicable to a project, so ultimately we'll have to pay 40% high on if it is modules, and in case we get cells from China, so we have to pay 25%. So invariably, the module manufacturing has to happen in India, and in case we get the cells also, although the graph shown by Kashish, it shows a significant difference between cell and module manufacturing. So still, if we can get cells made in India at a reasonable price, that will be icing on the cake. So the endeavor is always to go for Indian manufacturing, which gives a boost to everything. I mean, not only energy sector, but everything make in India, all included. But just a point to what Mr. Srivastava was saying, 12 years back, China was on the same verge. I just have a point to add, because I've been following China for last, I think 12, 13 years, so 2009-10 onwards. My take is from 2009 and onwards, I have seen the growth of, Trina and Jinko and all the big manufacturers. In fact, their module lines were very, very shabby. They started investing from the backward integration. So they always had ingot, polysilicon, ingot, wafer, and cell line to state-of-the-art, facilities. But the module lines were always very shabby. Very late, in fact, India had more technically advanced module lines than China in those years. So their emphasis on module lines was much, in the later stages, then they emphasized on the backward supply chain. But unfortunately, in India, because of some reasons, the trend has always been the opposite. We've always invested in module lines, and if you still see the graphs shown by Kashish, even after 3-4 years, although few organizations have taken a big leap in the entire value chain, but still you'll see a significant difference between cell and modules. Forget about wafer, ingot, and everything. So I do not see a parity in pricing happening with China over a period of time, unless we invest a lot in the backward integration also. But let's be hopeful. In coming times, since the ball has been set rolling, so we are hopeful that companies like Waaree and many others, so they'll also go backward integration. Now, as far as we are concerned in terms of our future projects, so a couple of things. Say, for example, as a developer, so I have certain tariffs which are locked. So if I have to, start buying modules for that particular project, which is happening, say 1.5 years down the line, or maybe 15 months down the line, in the current geopolitical scenario, and especially Mr. Srivastava mentioned about, what happened from last 3 days and still happening, there is no way we can predict the module prices. And even if we want to close with people like Waaree or someone else, there's no way we can do it. The price index is so volatile, whether it is cell price, and especially with the commodities related to hydrocarbons, for example, EVA backsheet. You really need to be Bejan Darula or astrologers like that to predict that. I'm not sure even he can do that. So that is the biggest challenge with us, that how will we predict the module prices, number one, for the projects which have been already locked, and number two, the projects which are in pipeline and bidding has to happen. We do not want as a developer that just in order to win the projects, we bid very shabbily and face the burnt at the time of when the project orientation comes. So that is the biggest challenge which developers like us will face. And simultaneously, in terms of technology also, I have personally visited at least 3 to 4 lines in last couple of months, although I know few people who have got the latest lines, but still demand in India is still for this 157 mm product, and as Mr. Srivastava mentioned, the M6 type of wafers, maybe 440. But the product which will actually happen 15 months down the line, that will be either M10 or M12. Either it will be 540 watt or it will be 630 watt. I have not seen, because of various reasons, even if people who have installed their lines making that product regularly, so that when actually they are in mode of making it, there are less rejections, they are more efficient, and there are no teething issues. The 157 mm cells, since being available, although scarcely, but still being available, the demand from India is always on the cheapest available product. So at least I do not know of any supplier who is consistently making 540 watt mono per bifacial glass to glass module in India. Although few people may have the lines, but unless they run it for 50, 100 megawatts, I am not sure they can supply us. Maybe they have the certification and all that. Maybe they can get ALMM to validate everything. But unless they produce quality product, how can we sure of reliability which can last for 25 years? So getting lines is one thing, but getting them up and running with fat, with consistent manufacturing, that will give us a lot of comfort. So in short, as a developer, our 2-point issues are: number one, the lines being ramped up in India, which I'm sure will happen in next maybe 5 to 6 to 8 months, and by the time we get to do procurement from India, they'll be up and ready, but still it's a point of concern. And second is, the volatility in the market stops us to lock the prices. So these are the two big issues which we are facing. I think this answers your question.
Right, Mr. Amresh, but I want to have another, question. Then, as a, big project developer, O2 Power, what are the steps that O2 Power is, taking to counter these problems, or basically to accommodate these concerns that you think you have?
All right. See, we have to get our meat from the goats which are there in the market. So the best way is basically, I need to block lines from the available, facilities. So whatever is upcoming, assumingly that they'll do wonders in their, in technical field while producing the models, like Waaree has been doing for last so many years, and many other manufacturers. So keeping a comfort from their past experience, but simultaneously, I think the idea now is to block the lines based on what can be closed today. Possibly, I mean, people give it different names, but maybe the conversion cost, maybe there are certain BOM items which do not vary a lot over next 10 to 15 months or something. So predicting that, based on that, basically, the one idea is to close your contracts or your tie-ups with manufacturers on that, and simultaneously keep the volatile items as pass through with some indexing mechanism, some pass through mechanism, some monitoring of pricing, so that we give the suppliers a comfort, we give the manufacturers a comfort of locking their capacities, while in there's a plenty of scope for the volatility index also to be taken care of. So that's a model. It's a hybrid type of tolling model which possibly people like us are looking at, and hopefully this will work.
Thank you, Mr. Mahajan. I think we will take answers of some of your concerns from the other panelists later on, but let's first hear it from another panelist on board, which is who's Mr. Chaudhary, from CEO from AMP Energy. Mr. Chaudhary, if you're there, can you switch on your camera, please?
Yeah, go ahead.
Yeah, hi, Mr. Chaudhary. So basically, AMP Energy is a leading developer who's active both in the CNI segment, the rooftop, as well as it's also bidding in the utility scale projects. So because of the recent ALMM notification that's there, that all, open access and net metering projects will also have to comply by that. What do you think will be the impact on developers such as AMP Energy because of this?
I think not only for the open access and the rooftop, but utility business at the same time is going to be affected due to the BCD and LLM, right? BCD have direct implication over the tariff because you can see, I think Mr. Srivastava has also explained, and I think our people have also presented. In India, we don't have the wafer and cell capacity till date, right? People are implementing, even though in the domestic manufacturer, they are not able to serve 100% of the capacity required by the developer. If they are serving also, because of lack of their technology also, and the pricing part is also overshooted. At the end of the customer, they are not going to increase the tariff while increasing of the BCD LLM, right? So it is a direct, I can say it is a direct and exponential impact coming under us, and all our investor and the financial institution are very scared about that one, right? And we don't know the roadmap also, because once I think the domestic manufacturer going to implement their module manufacturing as well as the sale, it will take couple of years, right? And for the adoption of technology is also not so easy what the China have currently, which is undermined by the Indian module manufacturer. And the Indian manufacturer is also totally depend upon the wafer and polysilicon and the sale from the China, because they don't have the India. So if you are putting the LLM, the government currently, they have not inspected any of the Chinese module manufacturer, or they have not any approved module manufacturer. So that is still one the linkage for us, and this is a stoppage of our going forward to implement the better way, I can say. So this is one step behind us, but still we are thinking how it is going to be up. In the government has given the approval for the domestic manufacturer. All are not the tier 1, except Waaree, Vikram and Adani. None of the module manufacturer are the tier 1. So this is a concern of the lender as well as the investor also, right? And for all these three, developer cannot serve the mission of the Prime Minister, which they have the target for 500 gigawatt, right? Because you can see just now you have shown the graph. The Waaree may can expand up to 5 gigawatt and Vikram may can expand up to 5 gigawatt in a year. So 20 gigawatt, if you are going very aggressive mode, they can supply for 20 gigawatt, right? And our target is a 500 gigawatt. Then still have the shortage of the module, and even they will give you the module, they will give you the higher premium rate also, right? And still the China, you can see the people are moving into like the N type of bifacial, right? 600, 700 watt peak, where we are in India, they are suffering for 400, 445 watt peak only for the BIS certification and other technology they have, right? If they are going for uplift in the newer technology, it will take a lot of time. It's not so easy. They have to go in and implement and change the line, because line cost is also very, very huge. And they cannot keep changing the line, and they cannot, at the same time, the Indian manufacturer, I don't think they have good R&D capability, so that they have to also take, it will take time. I mean, I think it's good for government, which they are implementing, while the ALMM and BCD to encourage the domestic manufacturer. I am in support of that because they are encouraging, because this is a development for the domestic manufacturer. But at the same time, my institution as well, government had to support for the another benefit, right? They make as a competition, they make as a partner and competitive environment like the China. So like I can give you the example. If you wanted to give some reservation in India, better you have to get some type of facility where everybody had to go and do in the same race. should not the differentiator, right? So I can say like that. So government had to given the facility in different way where they can directly compete to the Chinese manufacturer, not like you have to stop someone and you have to uplift someone. This is not correct method. While because indirectly or directly the IPP are getting affected. From our rooftop segment also in the CNI business also, tariff is very aggressive. With the end customer, they will not going to increase the tariff. When the BCD implication came directly, it is around 40%, 25% duty on the sale, which is directly, and apart from that, there is a taxes. Recently, the taxes has also gone from 5 to 12%. That is a additional burden for the investor, right? So all this coming into, I think the tariff is going to be very high, and the end customer is not going to support in that regard. So I think we are not so happy. We are disappointed, but we don't have the anyway. Yes, we are finding some of the mechanism how we can go at the tolling arrangement, or how can we have to do in the different way of the mechanism where we can partner and we can support to the domestic manufacturer. They have to expand their capacity and we can bring some of the sale, or we can do the different mechanism where we can expand their capacity also.
Thank you, Mr. Chaudhary, for raising your concerns. I am still not able to view you properly, actually. There's some lighting issue.
No issue, but my voice is
yeah, voice is fine. So probably, Mr. Samantha, we have heard what concerns developers have, both CNI segment and utility scale. So do you think the domestic, how this, these gaps will be, can be, fulfilled, or these concerns can be addressed? And so two direct questions I will ask. Do you think how this vertical integration of silicon wafers and other things, how much time India will take to get to that level? One. Second, what challenges it will face to become vertically integrated? And then there is a third specific question that I have for you, Mr. Samantha, is which is the ALMM listing for cells. Why that is not out? Because there are some concerns around that only modules list is out, cells is not out. Up to you, Mr. Samantha. What are your viewpoints? I've raised so many questions for you.
Sorry. Thank you, Yuti. Well, from the developers' perspectives, we see that, yes, there is a challenge. Though India is going with the vertical manufacturing, but as far as the modules concerns, which is very low cost and which can be ramped up very fast. The reason is that the equipment which we are buying today is a low cost equipment, and but if you go on the backward integrations, cell and then wafer, then ingot and polysilicon, so it will take at least 3 to 4 years time. So what I want to mean by 2025, we will be going to be a self-sufficient Atmanirbhar Bharat, but before that, it is not possible today, right? So as far as the module manufacturing is concerned, being as a developer, we are also evaluating, like what Amresh told, right? But there is a huge gap in a sense, like in terms of the technology and the product. Say, for example, if you look into the POE material, class 2 millimeter, wire bonding ribbon, so all these materials are not available. And even then we have a huge aluminum availability, and I don't think there is a huge challenge in that. But definitely we have to maintain that alloy at all. On the copper side, definitely as the busbar is concerned, this is fine, and plating and other things is fine. Then the glass we have, but for the monofacial, maybe to some extent, but the capacity is to 3 to 5 gigawatt. When we're talking in a short term, like 30 gigawatt and ramp up to do 50 gigawatt plus to 80 gigawatt and all. So there is a huge shortage of the material. That means at least 1.5 years, maybe end of 2023, we have to depend on China, right? Now, look into the business on the solar modules, and where we as a developer, we buy the modules. So if you look into the solar module, the solar cell is the major in terms of the electrical characteristics. There are a couple of parameters like LID, LETID, and the PID. All these things are coming from the solar cell. So in terms of the risk, I will say it's very low. So that means even we do the laminates, then there are different process of the laminations. We do an accelerated test, and we are sure that this will work. Coming back to the manufacturing of this equipment, today what we do, we import this all manufacturing equipment. We open the letter of credit, and then at least 6 months time is the manufacturing. And one more issue that we are facing, the installation engineers, they are not getting the business visa, so there is a different way that we are giving them the work permit, to work here temporarily, but that also is limited. You cannot bring them, I mean, I'm talking about immediately from China itself, so in the installations itself, it's not a very, very healthy situation. There is a challenge, right? Looking to the, the other issues like, the BIS is fine, but ALMM definitely, it will be a huge concerns, because as far as the product certification is coming, but you have to understand, what will be the volume that you are going to utilize in the different kind of the product range. Definitely, PLI is also, all these things are linked in, right? So as far as the PLI is concerned, this is fine, but what we have to see that if the manufacturers are not shipping or the billing every quarter as per the timeline, there is a penalty, right? So we have to look into both the ends, something like, one is the incentives that we get it, but if we cannot utilize those things, it will be in a different directions as well, So looking into the whole summary in the technology transitions, definitely, we are talking about another 2 years time, that P-type to when we are going to the N-type, what Mr. Chaudhary is also telling me, that yes, as a developers, what we want, we may be going for N-type material. The reason is that, so today, in a monofacial or the bifacial module, except, there is a power degradation. So after 25 years, 87% with the bifacial module plus gas, and around 85% power degradations we get in power in after 25 years, the P-type material. When the N-type materials, first year is not only that, year-on-year degradations is very low. So what do we want as a developers? We want to have a better quality N-type materials, and we see that after 25 years that there is a 90% power generations. So there will be a little cost difference, but definitely this cost will be paid off through the generations as a developers, right? What Amresh was mentioning, like in the China, absolutely you are correct. Like a lot of the module manufacturing is pretty 8 to 10 years old. On the other hand, what that does it do? If you take the financial terms, when we buy a equipment, so there are two things. One is the interest, and there's the depreciations. Or in the other hands, what I want to mean that their financial cost is absolutely zero. Something like I can compare, like today, the India is in few cities, even like Mumbai, Delhi, we are running with the metro lines. These metros are brand new, and it's much better than any other countries, either London or Paris or China, something like that. So what I want to mean that the brand new equipment which will be coming in India, and with the complete automations, so there will be a definitely, this will be one of the, the best operating line, in terms of either automations or kind of the technology involved in that. But going back to the, particularly on the cell line as well, so cell line setting up is a 15 months minimum. So that means even if we place an order and we have to wait 8 to 12 months time, depending on what will be our technology, whether we go for TopCon, I'm talking about obviously, first monopack and then the TopCon and then HJT, and also the equipment manufacturers are also limited. So they are also overworked, So in terms of the supply as well as installations, it's not a module line installations, which has, you bring like 4 or 5 engineers. So you need at least 20 to 30 engineers to work around the clock, for this. So there are different kind of the challenges that India will be facing, but I believe that we can train our engineer, we can send them, and we can get the, these are the small problem to be done. But for the time being, at least 1.5 year, maybe 2023 end. So as a developers, we have to be a little bit, we suffer, with the present conditions. So it's not only on the availability of the raw materials, but also in terms of the costing.
Thank you, Mr. Samantha, for giving a clear.
ALMM is still, it is very, very in a, I'll say, nascent stage, because in terms of the, I've also visited several factories recently, but all are running with the monopark is very, very limited, and that too also the wafer size, I mean, like even nobody is running except one or two with the M6 wafer. The going forward with the M10 and M12 is definitely a challenge, but with the new line, there won't be any kind of challenge. So therefore, there is no ALMM this thing side. But yes, for MSME, I think there will be a challenge because they don't get any kind of PLI, with this recent scheme. So these are the areas. Thank you.
Thank you, Mr. Samantha. So, Mr. Srivastava, yes, I'm circling back to you only. I think some of the developers have raised some of the concerns. So Mr. Mahajan has raised two valid concerns. Was the technology adoption part, how domestic manufacturers will be able to cater to that. And second is something on the price volatility. These are 2 points if you can highlight. And if you want to raise any, make any further remarks, please feel free to do that.
Okay, so I always say this, Rome was not built in a day, okay? And we are talking about changes and scenarios as if overnight things will change. And that's a expectation, just like, when I participate in all the Chintan Baitaks and everything, and people talk about, can the DISCOM rules be changed because we are suffering so much? It's like overnight changes don't happen. And we know that it's a gradual process. So all of us are settling into a kind of a regime where for the first time, probably, demand and supply at least are getting taken care of. There are lots of roadblocks. I mean, essentially at a macro level, if we look at what are the major hurdles in any industry, major hurdles in any industry is the demand side. Are we sure of the demand side? Are we sure of the supply side? At least these two things in the country are nailed, fortunately. The rest of the things have to fall in place gradually. I just want to address a few concerns because they may be impressionistic rather than more of factual. So first thing, that's not a impression, but Mr. Amresh Mahajan did talk about globally what's happening, that 540 glass to glass bifacial is something that is in demand, and rationally and logically why it is there, we all know. Just want to assuage him that for us, not only are the lines working just 30 megawatts, we are actually producing predominantly because that's the export order. Globally, because developers demand, especially in North America, they demand, that's what we are producing and consistently producing, not only just to BIS and IEC standards, but to far more higher standards consistently. I don't need to talk about how all those modules go through testing, etc. And I'm sure about other people who are also exporting to US markets, etc. The second part, which was a very valid point mentioned, that in China, they started with backward integration and they later on came to modules, which is true. The reason is very simple. Germany was far ahead. We know the game that was being played out in that little demand, with Germany being far ahead. And they decided that whatever is more labor intensive, whatever is more energy intensive, there was a very clear arbitrage to be played in. However, now the word has changed. We know what it is now, and we have to go by that. Now, I also like to put a point across that when we talk about any industry, there are various names given. We can call it tariff protection, we can call it, encouragement, etc. Any industry in the country, be it steel, be it software, be it anyone, name any one of them, not just in India or globally, when you nurture it, and that's why anybody who has gone into the detail and depth of the scheme related to encouraging domestic production, and it's not in solar sector, it's in semiconductor, it's in EV, everywhere there is a 5-year time frame given. So all the speakers who have spoken about ramp up of capacities, ramp up in technology, etc., there is a very clear 5-year roadmap before which all these incentives will gradually go away. So this is a very logical step globally. We look at any of the South Asian countries, any of the South American countries, even in China. So let's not be too worked up on that, because as I again repeat, Rome was not built in a day. On the technology side, it's very interesting. So we, just like people read about technology, they all want the latest in technology, but there has to be some level of, it's a chicken and egg story actually. Let's pull out the export data, let's pull out the import data, because that's what was coming to the country. 92% was coming as imported in the last 9 months, and you'd be surprised to see what is getting imported. When there was complete availability, it is predominantly poly, mono, small sizes. So it is interesting that when we are setting up lines, it's a huge leap of faith for me to actually set up a line for which the market in India, even after importing, is not there. But we have taken that leap of faith that we are putting up M10, M12 lines. But at the same time, I want people to be cognizant that when flexibility is there to import the highest technology and module, what is getting imported, and that is a publicly available data in terms of what is being imported, even for large project in terms of poly, etc. And it's a logical. I think Mr. Samantha made a very valid point about technology. P transitioning to N is a reality. That's not a problem at all. It will happen. And then HJT and TopCon will run, if I can use the word, simultaneously. Just to assure you, none of the manufacturers are, all the manufacturers, if not R&D, though the word R&D was used in a slightly derogatory manner. I wouldn't comment on that, but at least in terms of de-risking their portfolio, have ensured that the lines, at least we can talk about ourselves, that I can't disclose because we are in a silent period due to our SEBI IPO imposed restrictions. But yes, I can assure you that whatever is the latest technology in the world, the lines, the cell lines are coming for that. Module lines are already configured for what is required globally. The next part was a very interesting part on terms of the raw material. See, what's happening is, this is a problem that we are all facing together. Today also in the country, it's very interesting. Raw material, even when the modules today, as on date, there is no duty on modules, but we are suffering, all of us. In fact, the consequences of that are there for all of us. There is an inverted duty structure. The raw material are being taxed and the finished module is not taxed. So this is something, and by the way, for everyone to know, in fact, all of us know already, that's after 31st of March, the cost structure is changing because most of the exemptions that are available under a particular section are now withdrawn. So it is not it is a double-edged sword. Okay, so the exemptions on raw material going away are going to have a much more cascading impact than what the BCD that we are talking about. And last but not the least, I would say that this requires working together. I think the industry has a larger problem, as I said, on the demand and supply side being seamlessly moving along. The single biggest problem in the country is liquidity from the discoms. Once that gets addressed and the manner in which the contracts are existing structured, if you look at, forget the module side, the costing that has gone up. This is the first time when in the 6 months, if you look at the history, there is a blip upside. Otherwise, it was always downside. But the way the contracts are structured, and it has got nothing to do with the BCD, ALMM, etc. The kind of global price structure that has gone up by 27%, where none of the Indian tariffs, none of the Indian manufacturers come into play, is a far larger play than the game of domestic versus Chinese manufacturing. And we need to be cognizant of that so that we don't miss the bus, as they say, the phenomena of what actually is the root cause of the problem rather than what is the intricate cause of the problem should prevail more. Thank you.
Thank you, Mr. Srivastava, for addressing some of the comments that were made by other panelists on board. I just have one more question on you, I think, which is on the ALMM listing for cells, which is not yet out. Anything you want to comment about that?
So two things there. Again, I'm not too sure about, as somebody said, never comment on a sovereign policy. Okay, so I would not speculate on that. However, all the manufacturers that I am aware of, including us, are going out clearly all hog essentially on the cell side. As Mr. Samantha said, very capital intensive technology side. That's the thing that we are trying to nail. And because frankly enough, for any manufacturer, if you do not have the cells domestically produced, forget the tariff part, module business at this scale is unsustainable. I mean, it's if I can use the word, irrespective of the government policy, it is the fundamental tenet of a successful module producer. So I think we are going all out. And the second part, somebody did mention about, I forgot the name, about Prime Minister's scheme. Whatever you are seeing are capacities that are come out of the PLI data, etc. As I said, we are in a silent period. We can't talk about our capacity expansion plans. But if you add up what is in public domain, including the PLI, it's not just 5. It totals up to at least double that. But I can't talk much about it, at least during the silent period. Thank you.
Sure, Mr. Srivastava, no problems. Mr. Samantha, now, since some of you have told that we are not Bijan Daruwala to predict the prices, but I would still like to have an open-ended question there because, recently, as Mr. Srivastava has also mentioned that, some exemptions have been withdrawn and from 1st of April, there is a revision in the prices. And we also heard similar thing that there is suddenly within last 1 week only, the prices have increased by 4 to 5 cents by domestic players. So I think people are curious, and basis your understanding of this market, Mr. Samantha, we would like to know, what do you think the prices will be 1 year down the line?
Yes, there are two components. One is the silicon and non-silicon materials, right? See, if you look into the consumption pattern, right? Okay, right now I'm not. Silicon means solar cells, I'm keeping aside, Let me look into the other bombs, So these other bombs without duty, somewhere it should be ideally on the 9 cents. I don't want to go into the details, for each and every component. But yes, there was a duty on the glass, on the EVA because of the another 2 cents. But in Indian context, to be very frank, if we make a apple-to-apple comparisons, so there are a lot of other factors in what I told you, right? What is called the financial charges, in a sense, like, when I invest, this is one is the depreciation and the other interest part from the equipment side. Second thing is coming, for BOM, what do? We open a letter of credit. So what happens from the day to, when it arrived and then when it utilized. So almost like a quarter of a year, that the interest part on the BOM as a financial charges. The third is, obviously, like modules or in the BOM, there is a logistic cost, which is also, which is coming into this account. And lately, we have to see that capacity utilization factor. I have installed capacity, something, but I have not utilizing. Those factors are there. But yes, on the manpower side, with the labor arbitrage, I think we are much better positions. Even if we do either with the completely semi-automatic or automatic conditions, right? But in the modules, even when the modules are manufactured, but there are a lot of others is a manpower intensive, especially on the packing and the loading and then, transporting. So these are the factors, On the silicon side, yes, coming back to the point. So today's scenario in the value chain, if we look at the last 1.5 years, right? So the polysilicon cost, suddenly from $8 to $10, it went up to, somewhere $60, $65. So that means, what I want to say, there is a, what I will say, 600% a kind of a margin which are enjoying. So we have to be a little careful on that, basically after 35 days in the 1st of April onwards, when the BCD will be coming. I'm sure the Indian market, China will not leave. So therefore, there will be a lower in terms of the wafers as well as cell prices. That is the thing, I am going to predict, something. So I believe with the 6 months, 2 quarters, 6 months time, I think things will be much more stabilized and very, very transparent on that. And with the today's price, like 32 cents, what I'll say, I'll say it is not illogical, from the manufacturer perspective, but definitely from a developer's perspective, we can't buy positions with the 32 cents, right? You understand? I mean, so there is a huge delta, but today like 25 to 26 cents is a Chinese thing in modules, and taking into the another logistic cost maybe 1.5 to 2 cents, so somewhere it is 27 to 28 cents. Even then there is a 4 cents to 5 cents difference. So those things are, I'll say, very, very temporary, and in future, I think it will be more stabilized and we'll get a better pricing. That's my opinion.
Do you also think, Mr. Samantha, that Chinese suppliers will also cut down on their prices now, despite they will with the BCD they will be able to come at par with domestic suppliers? Do you think that possibility is there?
Yes, that's possible. See, basically what happens, right? For any manufacturing, this is fine, but as you see, India in the graph, like IEEFA, what they presented, 350 gigawatt. But these are 50 gigawatt is the theoretical, there's the installed capacity, but what is the utilizations? So 2022 will be something like 150 gigawatt kind of installation. So that means the capacity utilizations will be low. But what I want to say that there is a pricing mechanisms. What does it mean? Like how much, every manufacturer has got the different reason, different pricing, right? In China, definitely in a slightly higher, in the US and Europe, it's slightly higher. But what I want to say, with the less margin, they will not leave that 15 to 20 gigawatt, the kind of the capacity with the India and this thing. So there will be a huge, I will say price play, particularly on the silicon side, but in the module side, yes, there is definitely a chance. But not at the immediately first quarter, maybe from second quarter onwards.
Sure, Mr. Samantha. Mr. Srivastava, you have any comments on the price trends expected next few months?
So there is a good saying in my previous industry that no oil trader ever got it third time right. Okay, so I'm not going to hazard a guess, but what is clearly evident in this industry, there is a huge increase. What a container was for $350 became $10,000 at the peak. That's kind of an impact nobody factored in, and which created absolutely ruckus in the market. But more importantly, from the supply and demand side, if news reports have to be believed, but it's always a tongue-in-cheek comment about Chinese demand, polysilicon coming up to the kind of capacities that are coming up, there will be downward pressure. And I think this kind of price increase that has happened is abnormal. But in commodities, there is a phenomena called sitting on the chair. So once something which is at 100 goes up to 180, then comes down to 130 and stays there. So this 30 is like fixed. It's now become part of the system entirely. So that phenomena is, to me, I think it is going to be there. But on one aspect which has been a matter of debate as to, can a foreign manufacturer who has excess capacity drop prices? We also should look at the marketing aspect of it. India contributes to only 7 to 8% of the exports for China. Would they like to demolish their price regime by bringing it 20-25% cheaper? I mean, it's theoretically possible, but would you as a manufacturer want to bring down your balance 80%, 85% also because of wanting to supply in one market? Is the question that everybody has looked at. Third, but not the least, not on the price side, I think the policies, if read very carefully, they are talking about there is no bar on anybody putting up manufacturing capacity in India. It is to encourage domestic manufacturing. So if today anybody from global, and people are talking, I know all manufacturers have been approached by global players and some of them have also tied up. So there is nothing that is stopping people from producing in India, leveraging the ecosystem that will get created in 2 to 3 years for something that is going to stay at least for a decade. I mean, solar energy is not something that is going to go away at least for a decade. So that's the way to look at it. Thank you.
Fair points, Mr. Srivastava. So, Mr. Mahajan, do you think O2 Power has any future plans to get into manufacturing as well, as we have seen with some other developers?
Jyoti, we are exploring, we are testing the waters. So, we always believe that you should do what you are, expert at. However, since the market goes in that direction, wherein in case we feel that manufacturing is feasible, so we would like to take a shot at that. But as of now, we are focusing on our projects in hand, and let's see which way the future turns out. But I'll just like to comment on Mr. Srivastava's very interesting remark that the total Chinese export to India is around 5 to 6%, and would they drop the prices? So I think it's a valid point. But if you see, for a longer period of time, if the sustainable market for solar in India is, say, as you said, 10 years, 10 to 15 years. But I was looking at where actually they export. So 5% is for India, 6% is for Japan, and certainly, I mean, countries like smaller countries like Europe. So they're also having a significant share. Now, Japanese market is not sustainable, even if they are exporting 5 to 6%, but that is only sustainable for maximum next 1 or 2 years. And simultaneously, this also goes for many of the export markets. So if they have to see from a window of 15 years in comparison to 2 or 3 years, then yes, they should slash down. But again, it's not that simple. There are so many geopolitical situations also. And, people also talk, is there really a need of slashing? Is there really a need for them to slash the price? Because even if we have domestic module manufacturing in India, even if we have domestic cell manufacturing in India, although it is lower in comparison to modules, but they still control the wafers, they still control the ingot, they still control the polysilicon. So one way is they can balance the act by slashing one thing and increasing the price of another thing. The second way could be, I mean, hopefully it should not happen. Our Indian manufacturing should flourish at any cost. But I mean, always someone who's having a say in your backward integration, they can always play the game in their territory. So that is why I was emphasizing that we should go, very aggressively towards backward integration. And the graph which Kashish showed in the beginning, wherein even after 5 years, forget about cell, forget about ingot and wafer and polysilicon, the difference between cell and module at least has to be, zeroed down. That way, at least we'll be saving on the 25% of the cell import duty, BCD. So the way we expect from our market is, the first thing, the volatility has to come down. Second is the industry has to work in order to bring a parity between cell and module manufacturing. Although Mr. Samantha rightly said that a cell plant takes around 12 to 15 years to lay it down, and then ramping it up, making it efficient, it takes further time, wherein a module line is more or less plug and play type. But still, the giants like Waaree have to come and they have to decrease that window between cell and module, and that will be beneficial for everyone. That will give them a revenue boost. That will give a 25% saving on BCD to developers like us. So if that happens, I think people like us could explore going backwards. But as of now, I think we would like to stick to what we do best and look for a hybrid type of model wherein we patch with people like Waaree and few others and book their lines so that they can serve us when the need comes.
Thank you, Mr. Mahajan. And
Jyoti,
I think
I want to add a few things.
Sure,
So far, I think we are discussing on the silicon side, right? But we see there is a company from USA. They're setting up the 3 gigawatt line in Chennai, right? And which will be operations from the first quarter of 2023, right? So if you look into their cost structures, though neither they depend on the polysilicon, nor ingot, nor wafer, nor solar cells. This is a glass-based material, and definitely the cadmium telluride, which are very toxic in nature, but it doesn't matter as far as the cell and the module is concerned, and laminate, and they have a all the facility like buyback and all. So what I want to say, with that note, like when the silicon pricing is such a volatile, I am sure that that the First Solar, yeah, they're coming up with a kind of a cost of ownership and their sales price as well, and which are much lower than the silicon, I believe, But though there is a limited in terms of the capacity, and though they are not participating in the PLI, but they can participate maybe in the next PLI scheme, 19,500 crores, where with the low temperature coefficient, the efficiency wise is fine, So what I believe, with that incentives, they can cater at least the 3 gigawatt, in a short term, maybe further another 4 to 5 gigawatt in future as well. They're coming up with the 10 gigawatt in a global supply. So this is I'm talking about the cadmium telluride. The other one is the CIGS as well. Super is quite, in that way, but definitely from a developers' perspectives, if you have a choice, definitely we'll go for a non-silicon, or the module as well, either the cadmium telluride or maybe the CIGS, because of the several other reasons, So these are the 2 points I want to add. Thank you.
Thank you, Mr. Samantha. And I think with all the remarks and all the discussions that we had, this market is evolving very fast. The dynamics are changing very fast. And I think in next few months down the line, especially after BCD in next 6 months, we will have a better clarity on how, the expansion plans are coming on board, the prices are stabilizing or not. And I think with these concluding remarks, I want to close this session now. Thank you everyone for participating and sharing such wonderful insights and remarks. The recording of the session will be available on our website in a day or so. Have a good day. Thank you, everyone.
Thanks, Jyoti, and thanks, everyone.
Thank you.